jump right on into here. Okay, that's that. I don't want to jump. Okay, let's get out of there. Delete that. Come on over to Market Watch, see who's up for the day. All right, today's December. Today. All right, let's go back down here to find out the exact date. Today is November 22nd. So, November 22nd, we like to look at stocks that are going to be 10 days from today. So that is going to be the 6th of December. And the 6th of December has 21 companies. Okay, WILC, WRI, anyway, you guys can see them right there, B10, all these guys, 10 companies. You right click on one of them, show more on WLIC, come over to the quick chart, pops up, there she is. That's what she's done for the last year. The low way down here, nice steady movement on the upside, nice steady up kind. I like that. Okay, last 90 days. Sideways, look at this, sideways. Now I don't like these right here. This is 1, 2, 3, 4, 5. It's like no trading that day. It's like what's going on there, you know? This is a $5 stock. I don't even want to bother with a $5 stock. Because you're looking at a $5 stock and it's paying a 37-cent dividend. Something ain't right. Something ain't stirring the Kool-Aid. Okay? Alright, so I didn't want to look at that one. So let's look at WRI because that one just doesn't make any sense. Alright, this is what we could call a sideways chart because you started out the year right around 34, and look at this. Lo and behold, you're back around 34 again. So the last 90 days, we have a downward trend to a sideways trend. So the last 30 days, we're going sideways. Here we are. Okay, so today or tomorrow, today would have been a good... Actually, you know what? Had you gotten this list, you should have gotten this one this morning. Okay? Because 10 days prior to the dividend date is this morning. Okay, so you're looking at, let's bring this calendar back up again. Okay, so if the dividend is on the 6th, 10 days prior to would be the morning of the 22nd. That's this morning. All right. 36 cents. So the high of the day. All right, these numbers right up here. Okay, the opening. Okay, opening, high, low, close. Okay, so the opening of the day is 34.64. Do you see it over there? 34.64. The high of the day is 35.33. Okay, so 36 cents plus 34.64. You would have been out the exact same day. Had you used a trailing stop, you would have made a little bit more extra money. I don't know. You could still be in it. Don't know. Not going to go there. We're just looking at the 36 cents. Okay, so FAF. Let's take a look at FAF. See what they look like. Oh, let's go. Let's do an analysis of the chart first. Okay. The low of the year way down here, 32. High of the year up here, 43. Anyone can see that. Again, another sideways moving stock over here at 38. Look where we are now, 39. Last 90 days. She's in a downward trend. And we get down to the last 30 days. Sideways trend, and we're going upward swing at this moment in time. So you would have gotten in this morning. Look for your 34 cents. Here we go. It opened up at 38.63. 34 cents on top of that. You would have been out the very same day. Gotta love it. Okay, FGP. Quick chart. Ooh, I don't like this one at all. And they're only paying 10 cents, so I'm most likely probably would pass on this one. Okay, so Feral Gas. It's a good gas company. So you're going sideways for the first, what is that, 3/4 of the year? And we're down here, a huge drop in the last 90 days. Why is that? Look at this huge gap. Gap downs are a good thing because they have a tendency to fill. This one hasn't filled yet. So you got some up movement coming somewhere for some strange reason. Now this is a $16 stock paying 10 cents. Would I really chase it? I honestly could not get that question, answer that question. So let's move to some other software just to give you an idea. All right, and what did I say? What was that stock symbol? That stock symbol is FGP. Okay, you familiar with the software? What is that? FGP. FGP. Hit go. See what they look like. All right, the first set of numbers don't look that bad. Okay, average of 4 days. All right, here's where we come to a little bit of troubling situation. Okay, you're in and out an average of 3 or 4 days. Okay, we're only looking at a 51-cent dividend. The yield is 27%. That is a huge red flag. Anytime you go over 10%, there's usually something going on. I don't know. Okay, and the volume is only 700,000 shares. So let's take a look at what the 10-year chart looks like. That little tab brings you over here to Yahoo Finance. Now Yahoo Finance is going to give us a good indication of where she's going. Now this right here should give you the big red flag of a big fat no. 10 years ago today, she was at 21 bucks. And this thing went sideways for 10 years. Look at that, or 9 years. And then what happened right here? In July of 2016, she plummets from 20 down to 7. And look at these this red here, red here, red here, red here, red here, red here. That's all selling. People getting in, getting out. Look at the volume. It's huge compared to what it's normally way down here. No, the volume's on the low side. But lately, look at these selling days. Sell, 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 sell. Now, she bought them. So this is a big fat no. I wouldn't do this one because I don't want to get stuck with it. Now, 7 could be a great buying price. It could be, but do I really want to chance my money? I don't know. Not me. Okay, so there's too many to go for. So FGP is a big no. Had you got in this morning, $7.67, only went up 7.67, only went up 7 cents. I wouldn't have done it anyway because you're looking for a 10-cent move. Might it hit tomorrow, the next day? I don't know. Too many I don't knows for this one. Okay. FNV. Let's see what they look like. Why don't I just do that again? Okay, back up. Let's look. Okay, the low of the year 41, high of the year is 81. She's right now at 58. It's a nice little upward trend. Now she's in a downward trend. Now she's looking like she's going sideways. Okay, that's not sideways. That's down. Last 90 days, she's going down. Okay, so would we get into this one? I don't like this chart. This is usually a good indicator before you even get to the next one. But let's see what this software says anyway. FNV. FNV. There you go. And they only had 5 years worth of what do you call it? Dividends. 22 cents. It's not a bad dividend. The yield, no thank you. 1.5%. Nope, not even a million shares. Now I don't mind going, between 500,000 and a million, if all the numbers are good. All these numbers are good, right here. Ones I like seeing ones. Ones are great. However, it's only been there for 5 years, so it's not enough history for me. So we're going to say no, or I should say I'm going to say no. GNL. Am I going to do all these? I'm not even going to bother doing this one. I'm not going to chase 5 cents. All right, I'm not going to do any more of them because you saw my point, the point where I was getting at. You take a look at the stock. Take a look at the quick chart. It's easy to read. Anyone can read this. Low of the year, high of the year. Which direction is it going? It started right here, and look, it's ended right here. Basically, that's what we call sideways, where it starts the year and it ends the year the same, right around the same price, sideways. All right, she made a little dip down, sideways a little bit, hit down. Nice upward trend. You can argue all you want. That is a nice upward trend. Hits its high in August 1st, end of July, beginning of August, and then a slow decline right here. Now, the last 30 days, she's going, well, last 2 weeks, she's going sideways. I could deal with this. Going sideways for the last 2 weeks. Is it going to hit 36 cents? Well, actually, it actually did, because it did hit the 36 cents. But that's not the point. The point is look at the chart, read what the chart says. I'm going to share something with you. You might enjoy it. Come over here to this little icon. Click on that. A drop-down box pops up. Chart mode. Slide over. Another drop-down box. Hit seasonality. Now, to be honest with you, I haven't called Thinkorswim and tried to find out how many years of data they're using in order to get their average. This is their average right here for the whole year. It's basically a sideways moving stock. It comes up in January, goes sideways all year long, and it ends up the year sideways. Okay, so this might be a good one if you don't mind getting in and getting out. 36 cents, okay? FAF, we already looked at one. AIG, we all know who AIG is. Big insurance company, made all that money back then, a couple years ago. No, nice steady upward trend for the whole year. Makes a dip in the beginning of the year, and then a slow upcline for the rest of the year. That's very slow, but it's still a nice upcline. Okay. Let's go back to regular chart, standard chart. Okay, so AIG, sideways again. Look at this. 62, now she's at 64. Drops down into March, up, down, up. I love the gap up right there. But you know what I say about gaps? They have a tendency to fill, so eventually she might be coming back down here. Don't know. The gap might just be a coincidence. Okay, so last 90 days, nice gap. Now she's going sideways. Is she going to continue to make that move? Now today, did she make the 32 cents? I don't know. Let's take a look. She opened at 64.03 and hit 64.12. Didn't hit it today. Could she hit it tomorrow, the next day? Who knows? Let's take a look at what my software says. We're looking at AIG, right? AIG, and hit go. All right, big fat no. Too much space. 2% yield, not bad. 6 million shares, 32-cent dividend. The high of the year is 64, has a target of 65, 63, and it closed at 63.92. All right, but I'm going to say no because it's missing too much data. Yeah, 4 years worth of data, last 10 years? No. Too many stocks to choose from to be settling with that crap. All right, well, that's enough for now. Just to give an idea of what we're doing, what we're looking at. That's 10 days from now. On Thursday, we're going to do another one, but we're going to incorporate options, because options are going to be a little bit more involved, a little bit more detailed. But 9 o'clock on Thursday night, so let's give that one a try. And let's go back to here.